Over the summer, the global recovery from the pandemic faces new risks, from the infectious Delta variant, China's latest regulatory actions, and from inflation increasing as economies reopen. But we expect the economic outlook to continue to favor risk assets this year. First, the new virus strain is threatening vulnerable countries. In many emerging markets, healthcare systems are struggling to cope with surging infections. Vaccination rates remain low. Lockdowns are being reimposed, and tight fiscal budgets are limiting social spending. Thus, we have downgraded our forecast for Indonesia, Malaysia, Philippines, and Thailand. In contrast, we expect the Delta variant may only delay rather than derail recovery in the world's major economies, given their faster pace of vaccinations and stronger fiscal positions to support domestic activity. Thus, despite the spread of the Delta variant, we continue to see the global economy expanding by over 6% this year, its fastest pace in 5 decades. Second, China's recent regulatory actions from technology to education have caught investors by surprise. But the economy's V-shaped rebound this year is still likely to remain intact. The new regulations are unlikely to cause a material slowdown in economic activity. Firms may reconsider investment plans, and more volatile equity markets may make consumers concerned about the falling stock holdings. But the wealth effect is still likely to be less important for growth than China's increasing pace of vaccinations. Third, the world's major central banks continue to be dovish and expect increases in inflation this year to be temporary only. At its July meeting, the Federal Reserve signaled any tapering of its quantitative easing is still likely to be months away. In response, 10-year real yields, the yield on US Treasuries adjusted for expected inflation, fell to a new all-time low of negative 1.15%. The very low cost of borrowing in real terms will continue to support households and firms recovering from the pandemic. We therefore see the global rebound from the pandemic remaining intact despite fresh threats to the recovery. The economic outlook is thus likely to keep favoring risk assets this year. For more information, please read the latest edition of our monthly investment guide titled Navigating Crosswinds.